It appears that Chinese investors are dumping the United States dollar and buying gold instead. Many of these transactions are being performed secretly, so it is difficult to be sure just how large or how frequent the transactions are. But it does seem this is a recurring practice. Chinese investors are selling off US dollar-denominated assets, primarily US Treasury bonds. They are diverting the proceeds of these sales into gold. In August alone, Chinese investors sold at least $21 billion, 21.2 in US assets. This shift is consistent with the Chinese government's pattern of gold purchases. This raises intriguing questions about what their long-term financial strategy is. Their currency strategy is part of a much broader geopolitical strategy. There are two primary factors influencing the movement toward gold. First, there's a concerted effort by the Chinese government to strengthen the Chinese yuan. The Chinese currency, the yuan, has struggled recently in holding its value against the dollar. This trend has been exacerbated by a slowing Chinese economy. So it seems that selling dollar-denominated assets for yuan or for gold is a strategic move to shore up the local currency. Second, China and several other countries would like to weaken the influence of the US dollar. They call this de-dollarization. The US dollar is the principal currency in all global trade and in holdings by countries as a reserve currency. China and some other nations are very uncomfortable with this reality, both for economic and for geopolitical reasons. The US is struggling under the burden of a $1.7 trillion annual spending deficit and a national debt in excess of $33.5 trillion. Other countries see a risk in holding their investments in a currency that is becoming increasingly unsound. Furthermore, the US has historically used the dollar as a lever in foreign policy matters. This has prompted other countries to seek alternatives to reduce their vulnerability to American influence. They see buying gold as a sensible alternative. Given the diminishing confidence in the dollar and the geopolitical implications of its use, countries like China are left with limited options. They have found that buying gold is the primary alternative. Gold is one of the few markets with sufficient liquidity to handle the billions of dollars China is seeking to reallocate. So China is buying gold. The People's Bank of China's recent activities lend credence to this suspicion. The bank has been on a gold buying spree and repeatedly increasing its reserves. Officially, as of the end of August, the bank holds 2,165 to 165 tons of gold. This represents 4% of its total reserves. It should be noted that this increase follows a period of silence in reporting gold reserves. There have been several years during which both China and Russia have not reported any gold purchases. This has led to speculation that those countries have been secretly increasing their reserves. Many believe that China and Russia may have been amassing gold off the books. They suspect that the Chinese State Administration for Foreign Exchange, SAFE, holds thousands of tons of gold in secret. They suspect that China's actual gold reserves might be much higher than reported. Furthermore, unreported increases in central bank gold holdings, especially from countries like China and Russia, bolster the belief that China is deliberately stockpiling gold to reduce its dollar dependence. So what does this portend for the future? Our best guess is that these trends will likely continue for the foreseeable future. In early next year, we will have a better perspective into whether China will further increase their gold reserves. Such a move could have significant bullish implications for gold, potentially driving its price to new heights. The actions of Chinese investors and the government point towards a strategic reorientation away from the US dollar and towards gold. This trend, reflecting broader global financial currents, highlights the evolving dynamics of international finance and the growing allure of gold as a stable and reliable asset in uncertain economic times. Thank you for watching. If you would like to see more videos on this subject, give it a thumbs up and don't forget to subscribe. If you leave a message below, I will respond. Remember, always do your research and consult with financial professionals before making investment decisions. The information provided in this video should not be construed or relied on as investment, accounting, legal, or other professional advice under any fact or circumstance. You also might like to check out my pages on Facebook and Rumble, the Global Macro Digest are, and see my books that are featured there.